Before a government can spend, it must raise money. Where does all that money come from? Understanding the sources of government revenue reveals how public services are ultimately funded, largely by citizens themselves. By far the biggest source of government money in most countries is taxation. Governments tax in many ways. Taxes on people's incomes and earnings, taxes on spending such as sales taxes or value-added tax added to purchases, taxes on business profits, and taxes on things like property or specific goods. Added together, these taxes provide the bulk of the money governments have to spend. There are other sources too. Governments collect various fees and charges for licenses, services, or the use of public facilities. Some earn income from state-owned assets or enterprises. And when revenue is not enough to cover spending, governments borrow money, which becomes an important source we will look at separately. The crucial point is that most government revenue ultimately comes from citizens and businesses, mainly through taxes. When a government funds a hospital or a road, the money largely comes from the taxes people and companies have paid. In a real sense, public services are collectively funded by the public. For example, a government's income comes largely from the taxes people pay on their wages, the taxes added to what they buy, and the taxes businesses pay on profits, all pooled to fund public services. Taxes, spending, deficits, and budget rules vary greatly from one country to another, and they change with each government. Public finance involves genuine political debate, so treat these examples as illustrations rather than recommendations, and check what applies where you live. The main lesson is simple. Governments raise money mainly through taxes on incomes, spending, and businesses along with other sources like fees and borrowing, and this revenue funds everything the government does.